tax season. It's a time of year that often brings a mix of emotions, anticipation, confusion, and sometimes even a little dread. Understanding how tax laws impact your family's finances is crucial for effective planning and ensuring you're not leaving any money on the table. As we look ahead to 2025, several significant tax changes are on the horizon that could affect your family's bottom line. We will delve into the key changes coming in 2025, focusing on how they impact federal tax liabilities for families like yours. We'll break down complex concepts into simple terms, using real-life examples to illustrate their impact. From the child tax credit to the earned income tax credit, we'll explore the details and highlight what you need to know. Remember, staying informed about these changes is the first step towards making sound financial decisions for your family's future. So, let's dive in and explore how the 2025 tax landscape might affect your household. But before we continue, if you like this video, please remember to share it with your friends, hit the like button, subscribe to the channel, and then watch some more of our videos. One of the most significant tax benefits for families with children is the child tax credit. This credit is designed to provide financial relief for the costs associated with raising children, from education to healthcare. For 2025, the child tax credit remains largely unchanged, offering continued support for eligible families. The credit is worth up to $2,000 per qualifying child under the age of 17. This means that if you have 2 eligible children, you could potentially reduce your tax liability by up to $4,000. However, it's important to understand the nuances of the credit, particularly the refundable portion and income limits, which we'll explore in the following sections. The child tax credit can be a valuable tool for families, especially those struggling to make ends meet. By understanding how this credit works, you can maximize its benefits and potentially free up more funds for your family's needs. Here's where things get interesting. A portion of the child tax credit is refundable. This means that even if you don't owe any federal income tax, you may still be eligible for a payment from the IRS. For 2025, the refundable portion of the child tax credit remains at $1,700 per qualifying child. Let's say you owe $1,000 in federal income tax and have 1 qualifying child. The child tax credit would first offset your entire tax liability, bringing it down to 0. You would then receive a refund of the remaining $700. This refundable aspect of the child tax credit is particularly beneficial for low-income families who might not owe much in federal income tax. It provides a much-needed financial boost and can help cover essential expenses. While the child tax credit is a valuable benefit, it's essential to be aware of the income limits that determine eligibility for the full credit amount. For 2025, the income thresholds remain the same as in previous years. Married couples filing jointly will see their credit begin to phase out if their adjusted gross income exceeds $400,000. For single filers and those filing as head of household, the phase-out begins at an adjusted gross income of $200,000. This means that if your income exceeds these limits, the amount of child tax credit you receive will gradually decrease. It's crucial to consult the IRS guidelines or a tax professional to determine your specific eligibility and the amount of child tax credit you can claim based on your family's income level. Section 5, the Earned Income Tax Credit, support for working families. In addition to the child tax credit, the Earned Income Tax Credit, or EITC, provides significant tax relief for low to moderate income working individuals and families. This refundable credit is designed to reward work and offset the burden of payroll taxes. For 2025, the EITC is getting a slight boost, potentially putting more money back into the pockets of eligible taxpayers. The exact amount of the credit depends on several factors, including your filing status, earned income, and the number of qualifying children in your household. The EITC is a powerful tool for working families, often resulting in substantial refunds that can make a real difference in their lives. Understanding the eligibility criteria and claiming this credit if you qualify is crucial for maximizing your tax benefits. Section 6, EITC changes and income limits for 2025. As mentioned earlier, the EITC will see a slight increase in 2025. For instance, families with 3 or more qualifying children could receive up to $8,046, a modest increase from the previous year. However, it's important to note that the income limits for claiming the EITC are also subject to change. These income thresholds vary based on your filing status and the number of qualifying children you have. For example, in 2025, the maximum income for a married couple filing jointly with 3 or more qualifying children to claim the full EITC is around $63,698. Exceeding these limits may reduce the credit amount or disqualify you altogether. Staying informed about these income limits and any adjustments made annually is essential to ensure you're claiming the correct amount of EITC. Section 7. Adoption tax credit and gift tax exclusion, planning for the future. Beyond the child tax credit and EITC, other tax provisions specifically benefit families in unique situations. 2 notable examples are the adoption tax credit and the annual gift tax exclusion. The adoption tax credit helps offset the often substantial costs associated with adopting a child. In 2025, this credit will increase to a maximum of $17,280 per child, providing valuable financial assistance to families choosing to adopt. The annual gift tax exclusion allows individuals to give a certain amount of money to as many recipients as they choose without incurring gift tax liability. This exclusion amount is also increasing in 2025, rising to $19,000 per recipient. These provisions highlight how tax laws can support families in various stages of life, from welcoming new members through adoption to managing intergenerational wealth transfer. Section 8. Navigating tax changes, seeking professional advice. As we've seen, the tax landscape is constantly evolving, and staying abreast of these changes can feel overwhelming. That's why seeking guidance from a qualified tax professional is crucial, especially when dealing with complex situations or significant life events like adoption. A tax professional can help you navigate the intricacies of the tax code, ensure you're claiming all eligible deductions and credits, and develop a tax plan tailored to your family's unique needs. They can also keep you informed about future tax law changes that might impact your financial planning. Remember, proactively seeking professional assistance can save you time, money, and potential headaches down the road, allowing you to approach tax season with confidence. Section 9. Conclusion. Staying informed for a brighter financial future. Understanding how tax changes impact your family's finances is essential for making informed decisions and maximizing your financial well-being. By staying informed about key provisions like the child tax credit, EITC, adoption tax credit, and gift tax exclusion, you can plan effectively and potentially reduce your tax liability. Remember, knowledge is power when it comes to navigating the complex world of taxes. Seek professional guidance when needed and stay proactive in your financial planning. By doing so, you can approach tax season with confidence and build a brighter financial future for yourself and your loved ones. If you liked this video, please share it with your friends, hit the like button, subscribe to the channel, and watch more of our great videos. Thanks for watching.